Welcome back. This is Chili Davis, and I'm back to another video. I want to welcome back all my subscribers and welcome to my new viewers. This is the channel where we talk about my top stocks, and we also talk about generating passive income through dividend stocks or through business ventures. Okay, so today's video is going to be about three stocks. It is earnings call week for Apple, Amazon, and Microsoft. These three stocks will report earnings for the last 3 months. This is Q2, so this is quarter 2 of 2022. We'll have Apple will report on the 28th. This is an almost $1 trillion company, will report on the 28th this week. Also, the big juggernaut Amazon will report on the 28th as well. And Alphabet will report on the 26th, so that is on Tuesday. And then Microsoft will report on Tuesday as well. So those are the 4 stocks we're going to talk about tonight briefly. Again, this is earnings call week for some of the biggest tech companies. These companies are admired from Silicon Valley, and Wall Street will be judging the company, and we'll have to see if for the last quarter, if they beat Wall Street analyst estimates, okay? And that's in terms of revenue and earnings per share, how those numbers shape up, if these juggernauts can beat the expectation of Wall Street. Last week was a great week. The bar was kind of low, but Tesla did beat expectations set by Wall Street. Also, Netflix did. So let's see what happens this week. Okay, the first stock, Apple. Apple this past month has been up over 8.77%. Again, Apple has dipped in the last 6 months, but it has made a return. So if we look at Apple back in March, it was trading at 174, and you could have got this puppy as low as 135. So we're still thinking Apple can go to 200. Again, Apple is one of the best companies to own. Is a $1 trillion company that does pay a dividend. Okay. Also, they pay a 0.60% dividend per share. So that is good news. Again, this is the most #1 consumer admired company, Apple, led by Tim Cook, the CEO, and they will report this week on how well they did. Also, you got to take into effect that many of their parts are made in China, and China had COVID shutdowns. Okay. So that was some problems Apple had. Also, I think they mentioned they would slow hiring. So that's another issue. Apple mentioned they would slow hiring and spending, okay, moving forward. So we'll see if the analysts upgrade the stock or downgrade the stock, and we'll see what happens moving forward, okay? Next stock we'll talk about tonight is Apple. Again, Apple or Google or Alphabet. Alphabet being the parent company and Google being the main product of the company, the flagship product. I use Google for everything, so I own a little over 8 shares now in Google. And after the split, pretty much last week the stock split, and it opened up last week at $112. I bought some shares at $111. So I did get an opportunity. Again, most time when stocks split, they do take a 10% drop. So even if we look at it, this is not really bad. After the split, they're down to 107. Now, I do think they will come down further, closer to $100 per share, considering that one of the problems that Google may be looking ahead in the next coming quarters is currency issues. Again, the dollar is really strong, and also marketing and advertisement is slowing. Okay, there's a lot of companies cutting back on advertising and marketing, but again, Google or Alphabet may be one of the best companies at getting avenue and advertising dollars and revenues from advertising. So we'll see what happens during the earnings call, whether they get a good estimate moving forward. Again, it's all about the current quarter, how much revenue they did in Wall Street, if they beat those estimates. And then also, what does Sundar Pichai, the CEO of Google, think about the next 6 months for the rest of the year? What does the forecast? Do they see revenue slowing, or do they see profits decreasing, or do they see margins decreasing? Okay, we'll see all of that. What is Apple going to do? They do have pricing power, considering they are one of the largest tech companies. Okay, they've got a lot of sub projects going on, including YouTube. Okay, so this is Alphabet A shares. They are trading right around $107 per share. Again, I'd like to pick some up about 101, 105. Like I said, I prefer $100 per share and then ride it back up to 120, 125 per share. Get that nice 25% hit. But let's see what happens. Okay, so Alphabet will report this week earnings, and we'll see what happens on the quarterly call. Okay, they do not pay a dividend. And the last stock we'll talk about is Amazon. Again, this is another stock that split, but over the last month has come back. So we look at the stock on Amazon. They split on June, June 6th, on Monday, June 6th, they split, and then they fell as low as 103 per share. So I've been buying up Amazon as it's bumped up around 103, 108. I was buying it up, and now it's back at 122 per share. Okay, so that's good news. Let's see what happens on the quarterly earnings call. Again, they did make a big move this week by acquiring One Medical. That was the great news. Also, Amazon is closing Whole Food stores. Okay, so that's another thing. They're getting more efficient and shutting down some facilities around the country. Okay, so let's see what happens on the earnings call. Let's see if they have some more great news forecast for the year. And I think they will probably beat Wall Street estimates. I'm pretty confident about Amazon. I like this fact that the stock split. Again, they did a 20-for-1 back on June 6th. And now instead of stock trading at trading at $2,100, it is now trading anywhere from $110 all the way up to $122. It has already recovered just after 1 month. The stock has recovered nicely due to the management company and Amazon making a bunch of partnerships. Again, they did make a huge acquisition called One Medical. They're going into the healthcare field, which is basically what is it called, recession proof. Okay, so if you're in the healthcare profession, some of these stocks are recession proof, and Amazon is buying into it. Okay, and then also Amazon has a great cloud service, cloud computing. They made some more partnerships during this current quarter. So again, Amazon will report this week and talk about the forecast looking forward, also about the current quarter, Q2, about how much revenue and how much profits and how much margin did they make. Did they beat on the top and the bottom line? So that will happen this week with Amazon.com, led by Andy Chasey. This is just about his first year since Jeff Bezos has left the company. Okay, so again, these 3-4 stocks report this week, Apple being one of them, Amazon being another, and Alphabet. Okay, Alphabet will report as well, and that this stock has just split. So let's see if there's a new group of investors that come in and bolster the stock even higher. I think Alphabet is still a number one company, is quite competitive. I don't know what my life would be without YouTube and Google. So again, Alphabet provides a lot of value and has a lot of cash flow. And then a classical good company is Microsoft. Trades anywhere from $250 per share up to $324 a share. Is a great buy. They also pay a dividend right around 1%. Okay, and Microsoft did mention some trimming of some letting go employees, but not nearly as much as the other tech firms. So again, if you're just looking long term, the two tech companies you should always own is Microsoft and Apple. Okay, so these are 3 or 4 stocks that report this week. Keep your eye on, see if the numbers are good, see if the revenues are good for the quarter. And then also let's see if the stock pops 5% or if it stays the same. Who knows? We did see a pop from Netflix last week, and let's see what happens in this tech earnings season. So, okay. So if you'd like to get started today in investing, you can use my Robinhood link below. And I want to thank you for watching. Thank you for listening. Please like, share, and we'll see you on the next video. Good night.